The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Today's episode of Market Talk is brought to you by Growmark FS. Keeping up with the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic, grain, and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. Well, not quite as volatile of a day as I was expecting heading into the reports on Friday. It doesn't mean we didn't see some volatility. We have plenty to discuss after USDA released their prospective plantings and quarterly grain stocks numbers on Friday. The impact on the markets. Soybeans definitely a big winner to wrap up the week. Here to talk about the reports, look at the market with us, we bring in our good friend DuWayne Bosse of Bolt Marketing up in South Dakota. DuWayne, always good to catch up with you, buddy. And I know, we were joking a little bit off air. I know it's not necessarily a joke for you, but you guys buried under snow with more on the way. Spring. It's supposed to be spring planting time soon. What's going on, DuWayne?
I know. Don't worry. I think it was depressed when the forecast came out about Wednesday or Thursday. Today, it's kind of a half funny deal, and I'll get through it just fine. But yeah, got a little bit of snowstorm today happening, a little bit of ice, so we didn't have school today, and that's fine. I don't want the kids out driving, but it's Tuesday's forecast. It's making me giggle a little bit right now. So Tuesday, Wednesday snowstorm. Total right now is right at about 20 inches projected. It's like, what? That doesn't seem possible, but we'll just dig through it and move it out of the way. It eventually will warm up, Jesse, I'm sure.
Yeah, eventually we'll warm up. Just the question is, how quickly do we warm up? And I think that's a key talking point here as we take a look at these USDA numbers, headline numbers, right under 92 million acres of corn expected from USDA in that March 1 planting intentions. Soybean acreage down a bit from the pre-report estimate, 87.51, and then the all wheat acres number, 49.9. So I know those are obviously kind of the headline numbers that a lot of people look at first. DuWayne, as you looked at those numbers, did they really surprise you at all?
They actually didn't. And I don't think they surprised the market either from the way they traded it. I think you said the key word there, though, and I think we have to keep reiterating this today, is it's planning intentions. I have no problem with what USDA put out there, because honestly, if I filled out the form on March 1st for our farm, I intend to plant more corn acres this year on our farm in Northeast South Dakota. Obviously, with the forecast I just told you, Mother Nature might have a thing or two to say about that. So we've got till the 25th of May to get our corn in. And I know that's a long ways off right now, but as slow as we warm up, that could tweak and change quite a little bit. Prevent plant's going to be sadly an option. So no, I didn't really have an issue with the report. Little surprise with the higher winter wheat acres. That was increased another like 1.5 or something. So total wheat acres up 4.1. That combined with not losing corn or soybean acres to me just kind of goes, really? Well, how exactly are we going to do that? And, yes, less cotton acres, but boy, it's a stretch. And if you look at the map, Jesse, you see we're increasing these corn acres in the Delta from the cotton and in North Dakota. And right now, North Dakota is covered with a lot of white. It doesn't feel like we're going to get 92 million acres. And I don't think the trade thinks that either. Otherwise, these corn would have traded down sharply today.
Very, very true. And I think that is, the caveat there is we have to take a look at this and factor in the weather and the potential that is out there with this being intentions. And I think you're exactly right. That felt like why we saw some of that spread action. Obviously, the front month corn took a look at the stocks numbers, which we'll talk about in a second. But then the new crop took a look at the acreage numbers. And that's kind of where we settled up on the day there, DuWayne.
Yeah, it's always a fun report. I like this report because there's two different sides. I'm probably frustrated, and clients were probably frustrated with me beforehand because they wanted to say, well, what do you think? And I'm like, well, for which crop? Are we talking new crop? Because we got new crop report and an old crop report. And look at today. I mean, they can trade opposite directions. That's what corn did. So a lot of moving parts in this one. It's nice that it's a Friday. Maybe digest a little bit this afternoon and start to rethink. And come Monday, I think we start to trade U.S. weather. we started to mention here. I think this is the official beginning of the U.S. weather market season, and and it's not just us up here in the northern plains. You got the Delta and the southern eastern Corn Belt, and then Indiana, Ohio. A lot of rain coming. It's not going to be a fast start, so that should start to add a little bit of weather premium back into the December corn and November beans as well.
Very true. Well, thinking about beans too, obviously the big bullish winner on the day tied to that lower acreage number, but also too, as we look at the quarterly grain stocks numbers, both corn and beans came in lower than pre-report estimates. March 1 corn stocks 7.401 billion, soybean stocks though 1.685 billion, down from the trade guess of 1.74. So obviously an already tight balance sheet getting tighter, DuWayne, and I think that was a big influence on Friday's soybean trade.
It absolutely was. No, and I even took it to compare year over year. Soybean stocks down 247 million bushels. Now, back up and think what we did last year and how we talked, right? We talked we're going to run out of beans. We can't sell any more beans, and we had to rally to ration demand. Corn stocks down 357 million year over year. Now, that's even with this poor export demand we've had the last several months, but this last 3-week stretch hasn't been that bad, has it? All of a sudden, China's stepping in and buying. Rumors today, too, that, and it's not really rumors, it's been out there a couple times, that China's going to switch about 1 million metric ton of beans that they were going to buy from Argentina to build up their reserves. They're switching that to U.S. How many beans do we have left to give to them, Jesse? I mean, the market's job might be to ration the old crop demand, build up a little bit of weather premium for new crop, and then see how the weather goes and how planting goes from there. So yeah, the stocks report was definitely on the bullish side. Remember, the stocks report, that to me is the hard facts, the hard numbers here, because we can't change those anymore. I can't build to those supplies. The new crop planting intentions, there again, that keyword, intentions, they will change a lot throughout the year, and the market will justify them changing a lot.
Very true. Well, and I think as well, now that the dust has settled on Friday and we get into the week ahead and we start looking at U.S. weather and more, I wonder too, especially in these old crop contracts with some of the moves we saw on Friday, could we potentially see a little bit of profit taking on that rally here as well? I think that is also a possibility to keep in mind as we get into next week, DuWayne.
It really was. I'm surprised, it's the end of the month, end of the quarter.
Yeah.
I'm surprised we didn't have more profit taking and position squaring. But I think what we had, Jesse, is going back to the banking crisis. I think that generated all of our profit taking, all of our managed funds getting out of all their long positions. We're going to see a commitment to traders report pretty soon. And right now, the trade is estimating that the funds are still long, and the managed funds are still long about 100,000 contracts of beans. I don't know if that's the case. I wouldn't doubt if we're down to 65, 55,000 contracts. I think last week they liquidated a lot of beans on that downturn. And now, we've shot up a lot this week. We put in a really good week for the trade for the beans. Is that them buying back in? Maybe a little bit. I don't know. I think we're going to need to give the funds a real big reason to step in and buy these corn and beans. And the weather could definitely be it. They've been long corn for 2 years now. You really think they're going to get out during the banking crisis just to turn around and buy right back the next month? As a producer, I hope that's what happens, but that's kind of doubtful. I think they need a little bit more of a weather scare. So back to your original question, I'm sorry. Profit taking, position squaring. Yeah, there's going to be a lot of that next week.
Well, and with the wheat markets as well, I know you mentioned how we found more winter wheat acres, very surprising, but then spring wheat acres down. I would have to think maybe, with especially North Dakota expecting more corn, more soybean acres, that might have been a reason why we lost some spring wheat acreage. And we saw a good day in spring wheat on Friday. So thinking about this wheat market as well, we also got out ancillary news with Russia, with Cargill and Viterra saying they're not going to, move wheat out of Russia. So I think this wheat market's going to be very interesting as well as we get into the week ahead, DuWayne.
I think it has a lot of good support underneath the market. You're right. Because of all the reasons you mentioned. I think this Russia deal is pretty interesting. That Cargill, Viterra don't want to do business with Russia anymore. I think that's very interesting. The trade really tried to discredit it right away, but I think it's not a bearish story, put it that way. And you're right, spring wheat. I think acres are down there, and from producers I talked to this winter, it's the economics behind it. $13 new crop beans in North Dakota, they can make money on that, and more money than spring wheat, it seems like. You're not going to dip below 10 million acres of spring wheat, because you still got guys using it for rotations like sugar beets, where Sugar beets are their cash crop. The spring wheat is just, they need the rotation to help the disease. So they don't have to make a mint off it. But yeah, spring wheat acres are going to be down. They're going to be planted late too. And back on those stocks, I thought the interesting, I'm backing up on you here a little bit. The corn and soybeans on farm stocks are about the same as last year projected, but off farm is down. I've got notes everywhere, forgive me. I think down like 21% for soybeans and down 10% for beans. So those tight stocks you and I were just talking about are supposedly on farmers, in farmers' hands and in farmers' bins. That's the number that's really hard to guess for the trade and really hard to get accurate. They might be even tighter than we realize is what I'm trying to get out. But sorry, rambling on you, jumping around different positions. It's a big day, man.
It is a very, very big day. That is for sure. We're joined today by DuWayne Bosse of Bolt Marketing in Britton, South Dakota. DuWayne, let's talk a little bit as well just about risk management now that these reports are done and over with. And depending on what positions folks may or may not have had heading into the report, well, now it's time to reassess. You got the weekend, get into next week, got to make some moves, decisions, etc. What are some of your thoughts, initial thoughts here, looking at this market after the close, and some things that folks need to just keep in mind when it comes to their risk management moving forward?
Yeah, at the end of every quarter, especially with the quarterly stocks, I love that weekend to sit down and readjust my marketing plans. So my quick initial thoughts are talking about those old crop stocks. If you still have old crop corn or soybeans, because of where USDA thinks that they're on farm, to me, it would take a better basis to get them out of farmers' hands. Farmers usually are flush with cash right now. So depending on your area, you can maybe look for a better basis, but that is very site specific, isn't it, Jesse? I mean, I got guys in Southeast South Dakota that have a plus 50 basis on corn, and I'm telling them to sell it. And we're at a like minus 45. You're looking for a little bit better. So old crop stocks are tight. So I'm saying you can probably hope for better prices there. And a better basis, but don't get greedy when we get back to the old highs. You swore to me that you would sell it once we get back there. So let's keep that marketing plan. Maybe even just set those targets out there. June, July, maybe do an HTA, because like I said, I'm expecting the basis to get better. And then new crop, we've got these numbers from USDA. Go ahead and plug them into a spreadsheet for now, these acres, because that's what everyone else is going to have to do to trade. And then go ahead and tweak, make another column. You'll have the 92 million acres for corn in one column. And if nothing else changes, you're going to have about 2.0 billion for an ending stock. Okay. If you don't believe that's the case or the trade, you can take a few million acres off that in the next column. And then it does get a little tighter. But what it doesn't do, Jesse, is it doesn't get to the point where you say new crop corn's got to go to $8. So make your marketing plans. You get back to me. What are we at? These corn at 566. I'm still targeting that from 575 up. Really, that 620 area is where I start to get aggressive selling new crop. Maybe buy courage calls out there for summertime if you're worried about how high it could go if acres don't get planted. Buy those now and then set your targets up in front. So that's a lot, but just readjust over the weekend. We've got some new numbers to look at.
Yeah, and I think all great advice. Too much is not a problem, especially here on this show. We get the time to talk about it. And I think one other thought too, in my mind, if anyone maybe put on, say, some short-dated options or something like that ahead of the report, obviously they got some readjusting and some figuring to do there as well over the weekend. And I know it's case by case, DuWayne.
Yeah, it is. But you're right. When we dipped lower, we were kind of pushing a little bit to buy some courage calls out there. More than likely, we're just going to keep them on instead of taking any profit that's there, because I wanted them not to make money for clients, but I put them in place so that when we do get the rally, they start to sell the new crop and hedge. We are producers. We are literally in the game to sell a commodity at the end, even though we always want the highest. You'll probably keep those in place, sell them as we go. And then if the market keeps going, then you still have those on. So yeah, it's, like you said, case by case, but I'd keep those courage calls on right now. Don't take the quick little profit.
Let's talk livestock, DuWayne. Cattle market. Whew. Contract highs again there, and live cattle, feeder cattle, April taking over as lead month now over that 200 handle. I mean, this cattle market just screaming right now at us, DuWayne.
What a beautiful week when you look at a chart for cattle. And let's start with the live cattle side of it. A methodical, slow grind, almost boring, but that's only for a guy who just sits there and stares at it all day. If you just rolled in now and you were long on Monday, you're going to look at the chart and say, what a great week. But it was 45 cents higher. And then, of course, yesterday, cash cattle news broke. They were getting some cash at 170, and that really sent us to that next level higher. And yeah, it just made new highs into the close for June cattle. That's the one we should be watching. Good volume today, 35,000 at highs. Funds got out of a lot of positions there too with the banking crisis. It was about the last market they got out of. Sure kind of looks like this week they started jumping back in it. And we'll see on the commitment traders report. Really solid. We're bullish the cattle market. The only thing that can really hurt it is black swan events, the U.S. economy. So as bullish as I talk, Jesse, one thing I was doing this morning was setting up more LRP insurance for the feeder cattle side of things. You look out to the October, November, and January board out there, 225. I know everyone's talking that 240, the old contract highs, but maybe we put some on right here and now. And that's what we had a lot of guys do. And I'm proud of them for doing that because they're out there busting their butts in a blizzard to try to keep calves alive. Might as well make some money on them. Because I don't know what the economy is going to look like at the end of the summer. So as far as risk management, we really like that on the feeder cattle side up at these levels.
Good thoughts there. Good thoughts. Hog market, quarterly hogs pigs report came in pretty much right on the pre-report estimates. And so It felt like that the hog trade, for the most part, just kind of took the report and moved on. Okay day on Friday, minus the front month April down a little bit, but deferreds were up. What's your take in this hog market right now, DuWayne?
That's about how I would have expected it to trade after that hog and pig report. Because if you looked at it, like you said, fairly quiet. As I dove deeper into it and you saw the farrowing intentions, they were fairly low for the later spring and summer months. Now, granted, those are pigs from a while back. And then also, the front month were down because of the high number of hogs they had in the hog and pig report that weighed over 180 pounds. Well, those are essentially already dead by the time this report comes out. That's why our slaughter number's been so darn high. We keep on asking ourselves, why is slaughter so high? And then the weights even crept up. So hence down in the front about $1, but those back months showing a little bit of premium because we are expecting a little bit of a pullback in total numbers later. That hog trade has been crazy wild. I kind of want to say that the June contract lows are in, though. I don't see a reason why we have to go below 90. I think we can start to inch up, but it's not like we're so tight supply that I can sit here and promise 120 today. By no means. I just think the low should be in. And funds went short lean hogs, Jesse, worth mentioning because they hardly ever go short. So we shouldn't have that selling pressure out there either moving forward.
Good thoughts to consider. And one other thought too, in this broader protein complex, I didn't look, especially for cattle, I didn't look at the feed number on the reports, but I have to think with tighter stocks, that had to help out the cattle market a bit Friday too.
Absolutely. It was kind of funny in the stocks report, it actually increased feed usage a little bit, or we're assuming it did because the quarterly usage was a little bit higher than anticipated. I don't think that means we're feeding more numbers. And obviously the cattle market didn't say that either. What we're seeing is cattle that are not performing very well. Guys are selling cattle, they're on feed for the same amount of time. They went in the same weight. They're coming out 100 pounds lighter than anticipated. It was a rough winter. And it's muddy in Nebraska. It's stupid cold up here. That's going to help our bullishness on this cattle market as well, too. If we have a wet spring in the southern plains, which doesn't look like it right now, to generate some more grass and build up the herds again, guys would want to rebuild. Man, this market could really take off by fall. But I'll say all that, but like I said, I'll still harp on that LRP or put options. Do something for the calves for this fall because I just like our boys making money.
I think we all like to see everyone making money. Right. That's what it's all about. Let's put a bow on this, wrap it up here for today. You alluded to it, a very busy day on Friday in the markets. I know a lot of folks stay on their toes. It's one of the most heavily traded days of the year. Just looking at things, final thoughts from you, anything you want to mention or reiterate before we wrap it up today?
Yeah, well, I think it's coming together quite nicely. I mean, all winter long, we kind of harped and talked about, we thought the acres were too high. And I think we're going to start to talk about that now. We got the March acreage out, and now we're going to start talking weather in U.S. But that doesn't mean you just do nothing and just let this go. We've always pushed come springtime, when we get this weather scare and rally, we need to sell it very aggressively. Because honestly, my outlook for the economy, the U.S. economy, is not good by the end of the year. I'm just concerned, put it that way. So I've been a bull for a long time, but we're getting very close to the time where we start selling and selling hard. Old crop, new crop, 24 crop maybe. So let's review over the weekend. Let's get some targets in place, some profits where you like. And when you can't get the crop all planted, keep selling anyway, because that's why the market's high, is because you're not planting up here in the northern plains. Once we get it planted, the trade will already know about it and we'll be down a buck.
Well, if folks need some advice, DuWayne, and they want to reach out to you there at Bolt Marketing, what's the best way to do that?
Yeah, they can call us here directly anytime, 605-448-2365. You can always check out our website at boltmarketingllc.com.
DuWayne, I always appreciate your perspective on the markets, and thanks for joining us on a busy report day. We appreciate the time. Look forward to talking to you again real soon. Thanks so much.
Anytime. Thanks, Jesse.
DuWayne Bosse, Bolt Marketing. That is going to do it for Market Talk today. Find us online, markettalkag.com. I'm Jesse Allen. Have a great weekend.